More on these markets and what might be driving them. Jay Bala, Senior Portfolio Manager and CEO at AIP Asset Management. Jay, thanks for being with us.
Oh, hi, Amanda. Thanks for having me on.
So let's just start with, we're watching these markets day to day, and they're trying to digest, daily information, but also as they will price in what we know now about how this may turn out, and by this being kind of the economic consequences. Just give me your sense of where you think the markets are in pricing in worst case scenario versus a little more room to have to price in data points as they come in.
Yeah, I think given the frequency of the data that's coming out, it's very hard to predict. I think the way we're looking at it and what we're suggesting to our clients is really, don't even worry about 2020. Like, the next 2 quarters are going to be terrible. And then you're going to have some form of rebound, call it in Q4 2020. But look to 2021 and just try to understand what that market environment is going to look like, right? We're going to have some form of rebound. What we know for sure is that interest rates are not going to rise. Interest rates will stay somewhere close to zero, if not negative. And so if you're an investor and you're a bit older and you need that income stream, today is the day that you start slowly stepping into the market and buying these large cap dividend paying stocks. We suggest that don't buy individual stocks, buy broad-based indices, buy things like the TSX 60, things like the S&P 500, stuff that is very broad-based, incredibly diversified, and a lot of these companies will be sort of defined in the space of sort of too big to fail.
One of the things, of course, that we still have to see work through are, but here and in the U.S., big stimulus and business support being offered by our governments. We have yet to sort of figure out, Jay, what that will mean, and we have yet to see, for instance, a support package for the energy subgroup in our country, which is coming, we're told, along with aerospace. What do you do in the absence of actually seeing how it works in real term? Do you have to wait for that? Are you trying to price in expectations of what that will look like when you think of that U.S. stimulus bill and the money that will flow in the next weeks or months?
To be honest, I think you have to sort of bifurcate the two things. So on one side, there is the public markets. And if you look at the large cap, mega caps, the too big to fail environment, no matter what happens, look, the Canadian government is going to keep Suncor alive, regardless of oil prices, because they have to, right? They're going to keep the banks alive. There are certain sector groups that are just going to stay alive because the government needs to keep them alive. And so, the other part that we're looking at is, if you look at sort of the alternative investment space, the funds that are going to make the most amount of money in all of this is the sort of the private debt, private equity funds that can go into the private markets, because the private markets have something or don't have something that the public sector has, which is, at the end of the day, if Suncor runs into trouble, they're going to go to the government, they're going to get a bit of a bailout. A really small private company gets into trouble. Mm-hmm. Their concern isn't that their stock price is down. Their concern is they're just out of money. Like, they just can't pay the bills. And so, if you're a good private equity fund, a good private debt fund, this is your space to sort of consolidate sectors, buy out companies that are relatively cheap. Everybody understands that the circumstances are somewhat dire, and obviously we got here because of an illness. But that being said, look, a lot of these funds have their fiduciary duty. They're supposed to make money for the investors, and we think alpha is going to be generated in that private space. If you look at the public market sector, it's down 20%, which is not even close to what the private companies are doing in terms of revenue declines.
Interesting. We heard the Prime Minister today, Jay, saying, as he talked about this wage subsidy, he's expecting businesses that don't need it not to use it and to pay what they can, and that people who kind of game the system, there'll be follow-up and they'll be treated harshly. It's inevitable, though, that both individuals and businesses will kind of have their weaknesses papered over, including those that in a normal recession, in a normal kind of market, just a cyclical recession, they wouldn't get a bailout from anybody. How does that kind of affect your job and make it a little more difficult when we get these distortions that might last even longer than you would think?
Yeah, look, for us, I guess, because I guess part of our business deals with the public sector or the public markets, and then we have sort of a hedge fund or a private debt fund that deals more with the private space. It actually works well in tandem. So, look, at the end of the day, obviously, look, I don't think any company should be gaming the system at this point. I think the consequences would be incredibly dire if you actually did at a time when the government's actually being nice. But that being said, even with these wage subsidies, at the end of the day, the government can only support these small businesses for so long, and they're not going to stick around forever. And these companies are going to have to make decisions. They're going to have to make changes depending on how long this runs for. You know what I mean? Like, they can't look forward 12 months like the public markets can. These smaller private companies are going to live month to month, quarter to quarter, and the decisions they're going to make are completely different from what a large public company is going to do.
All right. It's great to have your thoughts, Jay. Appreciate it.
No problem.
Jay Bala is CEO and Senior Portfolio Manager at AIP Asset Management.